The deadline to file your income tax return has been moved to April 18th, but now is the time to get familiar with new tax laws and legislation that affects those investments. Joining us to talk details is Chartered Financial Analyst Timothy Baker with Metric Financial in Simsbury. Tim, thank you so much for joining us this morning.
Yeah, good morning. Thanks for having me, Angelo. Appreciate it.
So this could be a kind of stressful time for people as they get all those documents ready. They have to file those taxes. Tell us, as people start that process, what do they have to keep in hand, what to keep in mind?
Yeah, it's really important. It gets complicated, right? So I think really what people want to do is, number one, make sure you look at your 1099s, your year-end tax forms. For people that aren't used to looking, you'll find some nice surprises in there. And consult your financial advisor if you have one before you talk to your CPA, because they can help you get better prepared for that conversation.
Gotcha. So to break this down even more, we have filtered out some questions that people may be asking as they sit down to file these returns. The first one here, very simple, could be confusing. Maybe what tax bracket am I in?
Yeah, that gets very complicated, Angelo, right? I think people think they're in one tax bracket when they might be in multiple tax brackets. So let's say, for example, you're in a 24% tax bracket. You might actually be in more like 20% as a blended rate. So it's important to figure that out. A financial advisor or a CPA would be really good for helping you figure that out, because it's important to know.
Second question here, why am I paying capital gains taxes on mutual funds if I did not sell anything?
Yeah, near and dear to my heart, topic for another day. But basically, when somebody sells a mutual fund, right, you're going to have to pay a capital gain based on somebody else selling that fund. It's complicated why, but there are alternatives out there. We use exchange-traded funds at Metric Financial. There's a very specific reason for that, not the least of which is the fact that they tend not to distribute capital gains, which makes them very tax efficient, helps people lower their tax bills.
Third question here, can I take advantage of any tax loss harvesting in 2022?
Absolutely. Hopefully your financial advisor is helping with this. When the market's down like it was last year, you should be able to sell one thing, buy another, so that you're not out of the market. Use those losses to offset gains, but you can also use them to offset income. So it's $3,000 per year, and you can carry it forward, meaning if you had $9,000 in losses last year, you could use $3,000 this year, $3,000 next year, and $3,000 the following year.
And in this current climate, a lot of people are wondering about retirement funds. Can you talk about that and what people need to know on that front?
Yeah, so we talk a lot about asset location. So when people say, should I max out my 401k plan or my 403b, our answer is, well, you have to think about what things are going to look like in retirement. Anything that's pre-tax now is going to get taxed as income in retirement, whereas other brokerage accounts might get taxed more as capital gains. So it's important to know what that picture is going to look like when you're taking money out in retirement. And again, a good financial advisor or CPA should be able to help where you're making those investments now.
So all of that is a lot to process for people at home, but just to add to the confusion here, there might be some new rules that taxpayers have to worry about as well. Break those down for us.
Yeah, so two big ones that came out of, for those of you that don't know, the Secure Act 2.0. Number one, required minimum distribution age has been changed from 72 to 73. So for elderly folks, if you're turning 72 this year, you do not have to take an RMD. You can push that out to age 73, right? And the important thing about that is it helps you lower your tax bill. The second thing I would say is a lot of people worry about putting money into a 529 plan, because if it doesn't get used for college expenses, then it gets taxed and penalized. But the Secure Act 2.0 made it so you can move some of those balances into a Roth IRA. Again, that gets very complicated. Consult a financial advisor or an accountant before you do those things. But those are two of the big rules that came down the pike this year.
And to that point about seeking help, how can people take those steps? Where are those resources available?
Sure. So for us, it's www.metricfin.com. All of our contact information is up there and available. You can also Google Secure Act 2.0 and see some of the changes. But it's really important for people to take a look at their investments, pay attention to them. It's too easy to just pass things along to an advisor or an accountant. Work with a trusted advisor. And our mantra, as you know, Angelo, is watch those fees. The industry is filled with very high and hidden fees, and our goal is to help people uncover those things.
There you go. Good way to end it. Timothy Baker, thank you so much.
Thank you, Angelo.
Appreciate it, man.
Thanks for having me.
Have a great Sunday.
Same to you.
Okay, let's get to